welcome to OneScore and Moneycontrol presents Score Dekha Kya, and I'm your host Ruchira Sharma. Tracking your credit score is now more important than ever. After all, this number is a very important indicator of your financial health. And towards this endeavor, OneScore, a tech-powered app in partnership with Moneycontrol, has launched an educational initiative called Score Dekha Kya. Through the last few masterclasses with industry experts, we have decoded and understood what is a credit score, where can you find yours, why should you check it regularly, and why is it an important indicator of your financial health. Credit scoring is a very crucial task in the financial sector. In fact, it is in the self-interest of banks to avoid approving credits to customers who could probably default. And that brings us to the topic for today. Why do lenders incorporate credit scores in their decision-making matrix? And to understand this, we have with us two very special guests. We have with us Mr. Lokesh Nathani, life, business, and financial coach, and people happiness evangelist. We also have with us Mr. Devang Shah, Chief Risk Officer and Head of Decision Science at OneScore. So thank you, gentlemen, for joining in today. And I'd like to begin with a very basic question. Determining the level of customer reliability regarding a timely loan repayment is one of the key elements of credit risk assessment. And this is, of course, done on the basis of credit history analysis and scoring. So could you take us through the rationale of credit score and break it down into simplistic terms for our audience? We could start with you, Mr. Lokesh.
Yeah, so I think if you look at what is the history of credit score, I mean, there was a time in those old days when, we one person knew the other person, so it was very easy to assess whether to lend or whether to do business or not. But in these modern times, with the expansion of business, the lender sitting in one city, the borrower sitting in another city, how do you determine whether the quality of that person whom you're lending is good enough to lend? And that's where I think it's very, very important to get this credit score, which in a way defines, in a numerical way, the capacity of the person to pay. So I think, and it really helps, do good lending, which means that you also as a consumer get a good rate if your credit score is good. So I think it's very, very important in this modern society, in this globalization, that credit score is a very, very important tool enabling the lender to borrow the right money to the right person at the right rate.
All right. Um, Coming to you, Mr. Devang, how would you define the rationale for credit score? And we all know it's based on various characteristics, how a customer has repaid his past loans, how he continues to repay. But if you could break it down for our audience, how would you do that?
Sure. Sure. I think Lokesh has really explained the rationale part of the credit score quite well, right? I mean, yesterday, let's say a few years back, it was a very, very small society, right? Today, I think there are no practically boundaries as such, right? Lender may be in, let's say, one of the city, you are in some other city, and still the transaction takes place. To facilitate the transaction, lenders need to rely on, let's say, a mechanism through which they can understand your credit worthiness. And that is where I say, let's say, credit score comes into picture. In a very, very generic terms, it's a three-digit score between 300 to 900, which has been derived mathematically using your past repayment behavior as such. In a very, very simple words, you have taken a loans and credit cards in the past. How you have made a repayment of that, right? What kind of loans you have taken? How is it, have you had any bounces or not, or your EMI repayment was absolutely clean? Using all this information, the credit bureaus arrive at a one specific number to be assigned to you between 300 to 900. The closer it is towards 900, it is better for you. And that is where what lenders today use for the purpose of credit granting.
All right. So credit scoring for individuals is, of course, very different from the rating of countries and international companies. But which factors influence credit scoring, and what does a lender really check when they assess an individual's credit score? Mr. Lokesh, if you could explain this.
Yeah, so I think one of the obviously the key factor when you are checking credit score or arriving at a credit score is the repayment history or track record. But I think it's just one of the elements. There are many more elements that goes into arriving at a credit score. So when you look at it, how frequent a borrower you are. If you are constantly borrowing, I think that has an impact on the credit score. Even if you are checking with lenders in the market to borrow, we don't realize we apply 6, 7, 8 companies at one go. I mean, that also affects your credit score because it shows your desperation and probably others are not giving you. The third very important thing is that whether you're borrowing secured loan or unsecured loan, that also has an impact on your credit score. And lastly, I think obviously it reflects on your behavior in terms of, are you a impulsive borrower to spend money? It also tells you about your purchasing, a purchasing rationale. Are you non-stop borrowing to spend money, or what is the purpose that you're looking at? So I think all these factors define the credit score, and not just the repayment. Obviously, repayment track record, I'm sure, gets the highest weightage, but everything else also is factored in.
All right. Mr. Devang, what is your insight here? What would you like to add?
Actually, yeah, I think Lokesh covered most of the variables which are actually goes into the credit scoring as such, right? The only thing which I'll really leave with the entire audience over here is that it is not a credit score which you should be always worried, right? Because credit score is it's an average of averages kind of thing, right? I mean, let's say there are many factors which are there in your report. All of them has been summed up to into one single number as such, right? But it is very important to get into the layers below it and understand saying that, okay, whether all the loans or credit cards which are appearing against your name, whether they are correct or not, right? If they are not correct, please go ahead and rectify that. If they really belong to you, all the repayment history which has been mentioned, all the, let's say, any adverse events which has been mentioned, whether all those things are reflecting correctly or not. If you had raised any dispute with the bank or with the credit bureau, it should be part of that report. So clearly the idea is that, credit score is super important, right? But it is
Sure.
important for a consumer to actually get into the layers below and see that all the details are authentic, all the details are accurate.
So I think what Devang is saying is absolutely right. Many times when I look at myself, when I'm looking at my credit score, and if my credit score is upward of 700, I'm pretty chilled out. I don't really bother to go through the report in detail. We
All
see it
right.
only when the score is below 700 or
Yeah.
650. So I
That's
think it's
when our
very
boundaries
important
begin.
message that you must see the details and see whether the statement is correct or not, because probably your score can be even better than what it is. Probably there are some mistakes that are not correct. So I think
Yeah.
it works both ways. As much as it helps the lenders, I think it helps the borrowers also to know about their own credit history and payment history, etc.
Sure. But since credit score is actually based on your past performance, it does miss a group of people, who do not have credit history. And that is also very important. So, for general understanding, if you could tell us that what does it really, why do lenders incorporate credit scores in their entire matrix? And what does it really mean for those who do not have any credit history?
Sure. I'll take that question. So definitely, it's a chicken and egg kind of thing, right? So you need to have a loan and credit card to have a credit score, and vice versa as such, right? But it is not that you can get the loan or credit card only and only on the basis of your credit score as such. Practically every lender, or at least definitely every large lender, they always have a policies, surrogates through which they can actually give a loan or a credit card to a new to credit people as such, somebody who has been first time borrowers in a very simplistic terms. Banks have a mechanism to actually credit assess them. They may ask probably an income documents or something, right? Or few more documents to prove individuals credit worthiness or let's say repayment capacity. But definitely with that they can always start the things. There are also very interesting products in the market where you can actually place a fixed deposit, again that fixed deposit, take a credit card and start building your credit card credit history as such, right? So today there are very interesting method, there are very interesting mechanisms which exist whereby first time borrowers can actually create their credit history in a very very responsible manner as such.
All right. Would you like to say something, Mr. Lokesh?
Yeah, I think just to give you an analogy, if I am a first time job seeker,
Mm-hmm.
somebody needs to hire me, what do I look at? The companies will look at my resume in terms of my qualifications, what I've done in my life, etc., etc. So I think similarly for the first time borrowers, as Devang rightly said, yes, there is no credit history, but the company that you're working or the business that you're running, and probably few extra documents will be asked in the beginning to start with, and then you go on building your credit profile. So I think it's like a first time job seeker, you have to go through little extra steps to ensure that you are there.
All right. So, CIBIL score is often used, synonymously with credit score. And as you all mentioned, it refers to a three-digit score between 300 to 900, with more than 700 being considered good and loan worthy. But could you explain for us and our audience that what is the difference really between credit rating and credit score, and what is the difference between CIBIL score, which is used synonymously with the larger term of credit score?
So, I think my understanding is that the credit score is all about the individuals mostly. It's about the individual's capacity to pay the loans that he or she borrows. But when it comes to credit rating, I think it's more used for the corporates, the institutions, and the numbers don't work in the corporates. They are defined as letters, so A, B, C, D. Whereas in credit score, it is all about the individual score, which is the numeric number, as we all mentioned, between 300 and 900, 900 being the best. And 300 is something, which people would not like to touch to give money. So I
All
think
right.
that's the way I look at it, the difference between a credit score and a credit rating. Yeah.
Yeah. Mr. Devang,
Sure.
any input from you?
Yeah, I'll take the second part of question, right? What's the difference between a CIBIL score and the credit score as such? So just taking a step back, RBI has actually given a licenses to four credit bureaus in India. They are TransUnion, CIBIL, Experian, Equifax, and CREF Highmark. And let's say RBI has done a fabulous job of ensuring that every lender, right, whether banks, NBFCs, the home finance companies, everybody has to submit their data to this all the four rating agencies as such, all the
Mhm.
four credit bureaus as such, to be correct. Uh, Now, Civil being one of the very early entrant, right? And let's say I think they have become like a really synonymous for a credit score. But credit score is a very, very generic name. All the four bureaus have a bureau score, right? No, being known by, let's say, experience score or a Civil score kind of thing. So credit score is a very generic term, whereas a Civil score actually pertains to a score specifically provided by TransUnion Civil, which is one of the license holder from Reserve Bank of India.
All right. So, as Mr. Lokesh also explained, that credit rating agencies are different from credit information bureaus due to their function, because the former is for organizations or companies and governments, countries, while the latter is for individual borrowers. But that brings me to my next question: that who regulates these agencies in India? And different agencies can have different numbers. So, how does an individual really assess or evaluate their score?
uh, all the four credit bureaus are being governed by Reserve Bank of India. There is a specific act which actually governs all the four bureaus, and RBI has done a fabulous job in terms of taking many steps which are even ahead of a developed market.
Mhm.
For example, let's say one very recent thing which came just a few days back, whereby RBI actually ensured that all the credit bureaus are part of the internal ombudsman framework.
All right.
This is very, very important because as a consumer, now I can actually approach RBI directly in case if there is any specific grievance which I have against the data being reported in the bureau. So from that perspective, RBI has been managing this space on a very, very proactive basis.
All right. Mr. Lokesh, any inputs from
Yeah,
you?
I think, so as he rightly said, the credit bureaus are governed by Reserve Bank of India and the rating agencies are governed by SEBI, the Security Exchange Board of India. I mean, that's the distinction between the regulation for both individual as well as, say, a corporate credit score, so to say.
All right. So, moving on to our next question, credit scoring is, of course, a very important aspect and the core responsibility of lenders in their risk management or assessment systems. And individuals are regularly assessed and evaluated according to their credit worthiness. So, as an individual, how does one really apply and seek their credit score? And do lenders really have access to their entire outstanding credit balances, account balances, and uh, does your annual income actually affect your credit score?
So there are many ways through which you can actually access your credit score as such, right? But let me just put it like this. Uh, Now getting a credit report and a credit score, it's it's so good for the consumer that as if you are getting a question paper beforehand, right? So before you are going to apply for a loan or credit card, you will clearly know what kind of information a bank is going to look at before accepting or rejecting your loan application as such, right? So from that perspective, looking at the bureau report, bureau score is like super helpful as such.
All
There
right.
are multiple ways of getting the credit report. You can actually go to any of the bureau's website and download your own credit report. There are many app similar to OneScore, which enables you to actually get the credit report also completely free. Certain apps are no ad, no spam kind of behavior, which ensures that your data continues to remain with you and in a very, very secured manner as such. Uh,
Right.
uh, I think I'll stop over here.
Mr. Lokesh, another extension to this question is, do lenders have access to an individual's outstanding card balances or account balances? And does your annual income affect the credit score?
Yeah, so just to add to that, so one is, to the best of my knowledge, annual income really doesn't impact your credit score, because credit score is all about your behavior. I think it's a lot to do with your behavior as a borrower than the income. So I may earn a crore of rupees, but if I'm impulsive borrower and defaulter, my
Mhm.
income will not really improve my credit score. So credit score, if you really want to improve, as we mentioned earlier in the session, it's very, very important for you to ensure that you keep your promises in terms of the payments that you signed for. I think that's one which is the key. And of course,
Yeah.
then it comes how often you are borrowing, what kind of borrowing are you doing, secured, unsecured? Are you an impulsive spender and because of which you keep borrowing a lot? And lastly, let's take, for example, if I have a credit card and I have a limit of 10 lakh rupees, and I think if I'm borrowing or if I've used the card, which is more than 40-50%, and I continue to roll over the credit, it doesn't reflect good on the score. So it's very, very important to maintain the basic hygiene as a consumer or a user of the borrowing facilities that I avail. And yes, income really doesn't impact your credit score.
All right, that's also good to know. Moving on to a last question for this episode, and a very pertinent one. What does one really do if you're refused a bank loan?
So as a rule, as a regulation goes, right? I mean, every bank is supposed to inform you the reason for your decline, right?
Mhm.
Whether it is because of bureau score or because of certain income norms or any other norms being not met. Banks are under obligation to inform the reason for decline as such.
All right.
Uh, right? If it is because of, let's say, bureau score, or if it is because of the repayment behavior, I think very first thing, if already not done that, right, the very first thing will be to continue to scrutinize your credit report completely as such, to see that all the loans and cards reflecting and against your name are accurate, the repayment behavior is coming properly. I'll say, let's say there is no, and Lokesh said it very aptly, there is no other option but to actually make repayments on a timely and a very disciplined manner. That's the only way you can build a very, very robust repayment history to ensure that your any future loans or cards do not get declined as such. There's much more like a health check, right, which you need to ensure that you are doing not when you are in the ICU, but it is when you are actually, feeling better, right? And let's say as a part of the preemptive measure, you continuously do your health check. I think looking at the bureau report is also exactly like that.
All right, Mr. Lokesh,
Yeah,
what would
so
you like to add?
just to add my bit. So I think loans will get rejected, and as Devang rightly said, you need to dive into the reasons. And since we're talking about credit score, if that is the reason, as he rightly said, you need to really do an analysis and probably make it better. Probably there were some disputes for which you did not make the payments. There can be some other reason make that better. That is one. Second is, many times, banks, every bank has their own norms for giving a loan. So probably you do not fit in those norms, even though your credit score is good. Maybe because there was a geographical reason or the company or the industry that you work in. Then I think it's better to look for a bank, which clearly service that segment of customers. I think that's the way to go about it. And my message to everybody is that please do not take credit score very lightly. Please do not take your credit habits very lightly. Those days are gone now in this era of technology. Every
Mhm.
possible information is available and you cannot escape this for sure.
All right. Fine. So, just before we wrap up, if you could give us two quick strategies, because as we all understand, lenders incorporate credit scores in their decision making matrix. Deciding who is worthy of a loan is also fraught with multiple complexities, and banks struggle with that. But all this is dependent on the credit score. So, if you could give us two quick tips for our audience on how to build and maintain a robust credit score. Mr. Lokesh, we could start with you.
So I think the easiest way to do it is pay on time. I think that's the easiest and the very basic one. And second is, I think, borrow only when you need it. Don't borrow unnecessary. Don't be an impulsive spender. And
Mhm.
just because the credit is available and you are being lured with all kind of offers, don't fall for it, because you may not be able to service that loan going forward. So be a little careful in what you borrow and what you spend.
All right. Mr. Devang, quick tips for our audience.
Absolutely. First point is exactly same as Lokesh said. Making a payment is the only way you can actually protect your credit score. I will also talk. The second point will be about the building a credit score. So I think first point was more about protecting the score. Second is about the building credit score. So definitely in today's world, having a right data footprint is super important for all of us, right? And hence it's important that you even if you don't have a loan obligations, you are not planning to buy a home loan or a home or a car or something, you may not need those loans as such. But it's important to have, let's say, either a credit card which is backed by a fixed deposit or a regular credit card, just to ensure that there is a continuous data pattern which you are bringing on the table as such, right? Many times lenders do look at it saying that, okay, this customer hasn't really borrowed in, let's say, last 3 years, 4 years, 5 years, right? And they may treat that as a absence of information. I'm not saying it's a negative behavior, but it's an absence of information kind of behavior, and hence there is nothing wrong in building a disciplined credit behavior by using a credit card or by using a secured credit card which are available in the market today.
So
All right.
basically, just to add, what you are saying is that even if you have no plans to travel overseas for next 10 years,
Mhm.
it's okay to have a passport. At least have a passport.
Absolutely, yeah.
Exactly.
Very well said, very well said.
Yes, and you need to plan for the future, even if you don't do it right away. Great.
Right.
Thank you so much for these very interesting and important tips for our audience. Clearly, credit score is a very important number. It determines your credit worthiness, and it also enables you to give wings to all your dreams. So, thank you so much both for joining in today, and thank you for giving all these tips to our audience.